everyone. Welcome back to another episode of our weekend market analysis series. In this video, we are diving deep into the gold market to set the stage for next week's trading opportunities. And trust me, there is a lot to unpack. But before we jump into the outlook, let's rewind and revisit the key highlights from last week that shaped our trading decisions. So, as you will see here on your screen, this was our trading setup prior to the beginning of last week. And for those of you who saw my last week video, remember price action was sitting above an important confluence where price was above the ascending trend line. And of course, our key level had the $2,500 area. And we were actually looking forward to see how the market is going to be reacting to this important confluence at the beginning of last week. And remember how we use our key levels whenever we see buy potential above the key level, we look out for buying opportunities. And if price breaks down the key level, we look out for selling opportunities. And of course, during the early hours of last week, it was more of selling pressure below both structure, and this led to selling opportunities as we wrote that 250 pips move to the downside. Well, during the midweek, while trying to catch that uptrend after price action found by pressure at this 2,475 area, we got stopped out a couple of times, gaining some losses. But fortunately for us, we were able to capture this bullish momentum, which started on Wednesday all the way into the $2,530 zone. Well, we saw a surprising twist with the NFP reports. Even though the numbers were weak, the market reacted positively in favor of the US dollar. And why is this? Well, it all comes down to expectations. It appears the market had already priced in a poor NFP, and when the data confirmed it, we saw profit taking activities on the previous long positions, which was an opportunity to cash out ahead of the weekend. And this resulted in the strong bearish move to the downside, as you will see right here. For those of you following along and missed out on last week's updates, have left a link right in the description box below detailing the breakdown of each of our entry points during the course of the previous week for educational purposes. Now, in preparation for next week, the real question at this point is what is next for gold? In fact, with federal officials hinting at easing policy and the market leaning towards a 25 basis point cut, the path of least resistance for gold seems to be to the upside. In this video, we are going to be dissecting the chart, keeping an eye on the trend, key level to watch out for, and patterns that could give us a trading edge for the week ahead. Remember, this presentation is designed for educational purposes only and not financial advice. Trading carries risk, so always consult a financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. So I will not be deliberating on the daily time frame today, as the structure we have on the daily time frame still remains the same with what we have been looking at in the last 3 to 4 weeks. So in this video, I will be focusing on the 4 hours time frame where I was able to identify a simple trading setup that we are going to be using to navigate the structure next week. But before we go into the technical details, let's turn our focus to the upcoming events that could shape market sentiment next week. And by reviewing the economic calendar, we can pinpoint how this upcoming event will shape price action, helping us to spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. So, based on the asset we are monitoring for this week, we are going to be focusing on high impactful event from the United States economic docket. Now, the first high impactful event will not be coming until Wednesday, 11th of September. And of course, we have the presidential debate coming up on that day. And this debate could impact the currency market by influencing investor sentiment and policy expectations. Key factors including the candidates' economic plans, which may sway the US dollar depending on whether they are seen as business friendly or risky. Now, this is one event everyone will be looking forward to. Then, on that same day, we are going to be looking at the Consumer Price Index, which measures the average change in prices of goods and services in the last 30 days, indicating inflation levels. Then on Thursday, September 12th, we are going to be looking at the Producer Price Index, another inflationary data which measures the average change in prices that producers receive for their goods and services. Then, fast forward to Friday, September 13th, we are going to be looking at the publication from the University of Michigan, that is the Consumer Sentiment Index, which measures how optimistic or pessimistic consumers feel about the future of the US economy. And in this regard, a higher index indicates confidence, suggesting stronger spending and economic growth, which can boost the US dollar positively. These are the high impactful event we are going to be looking forward to this week, and as technical traders we do understand that the anticipation of this event has its way of influencing how market participants will behave, which will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I was able to identify a simple trading setup after taking into account the character of price action in the last 2 to 3 weeks, I guess 3, 4 weeks, I think, since August 22nd. And from the look of things here, it is quite clear that the market has been in a consolidation phase ever since it tested that record high at the 2531. And as a result of this, we have a demand zone right here between the 2470 and the 2485, where we have seen here that every attempt by sellers to break through this structure in the last 3 weeks or so has always been met with strong resistance from the buyers. And look at what happened on the last trading day of last week. As soon as price got into this area, we saw a sharp rejection revealing the presence of buyers around this area. Besides this, we cannot ignore the supply zone between the 2531 and the 2420, which of course has been known to be a strong selling niche ever since price action tested that record high. Now, with a consolidation structure identified on the chart, you know how we treat our range bound structures in this community. We exercise patience waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. But in this case scenario where price action has been trading within this range bound structure in the last 3 weeks, we're beginning to see some potential trading opportunities within the structure that we can actually use to navigate this market. Now, within this range bound structure here, you will see that after this bearish impulsive move to the downside, we can see how price action evolved into a reversal pattern that looks more like a double bottom structure, where the neckline of this pattern is sitting exactly at the 2495. And to validate our reversal pattern, we need price to break out of the neckline, which actually happened last week, as you will see here. In fact, the breakout also coincides with this descending trend line that is marked out here after highlighting the series of lower highs. And from what is going on right now, it appears that price action is back to retest the neckline and, of course, that descending trend line, where the emergence of buy pressure here will be a good opportunity to continue the uptrend move. And from the look of things here, judging from how the market closed last week, I can see a sharp rejection of both the neckline and that descending trend line. And one interesting thing about this whole thing is that price is also doing a sharp rejection of that demand zone. And for the fact that price is sitting above this demand zone, and after taking into account the fundamental factors behind the scenes, which projects that the path of least resistance for gold still remain bullish, I'm looking to join any buy opportunity within this particular area. However, um, we will need to see how the market will react to the structure at the beginning of the week to confirm if we are going bullish. Now, in as much as we're talking about the buy potential in this market, we cannot ignore the potentials that sellers can also come into play. And if they do, what are the things we want to see on this chart that will make us feel comfortable joining a bearish move? For me to join a bearish potential in this market, I would rather want to see price action break down both the descending trend line and that key level at the 2485 area. So to give a visual representation of what I mean here, I would like to see price break down both structure, retest it, giving me signals that sellers are getting stronger before I can join a bearish move. But I doubt if this will happen this week. But if it does happen, we shall be on standby to capitalize on that opportunity. So this is my simple view on the gold commodity for this week. At the beginning of the week, I will be dropping my updates right in the description box of this video after monitoring price action during the first couple of hours of the new week. If this video helped you in making your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks you for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.